everyone. In this video, I'll be discussing on the discussion question provided. So I'd like to share my screen with you all. Let's get started. Understanding basic accounting concepts. So in this question, I'm provided a scenario where I have been recently hired by a small retail business to assist with their managing and organizing the accounting records. So, as a part of my role, I have been approached by a group of non accounting professionals within that organization who are seeking for some better understanding of the basics of accounting. So, my goal for today is to simplify these concepts and explain how they directly apply to the daily operations of the business. So, I will try to make it as simple as they are the non-accounting professionals. In this discussion, I have covered certain contents like major concepts from chapter 1 and 2 of financial and managerial accounting, trial balance and its purpose, how to prepare balance sheet from trial balance. And I have also included some of the references that I have gone through. Overview of accounting concepts. Accounting in business. What is accounting in business? So it is basically a process of three things: identifying, recording, and communicating the financial information about an entity to the stakeholders. And the purpose of accounting is to provide the relevant, reliable, and comparable information, which will further help us in decision making, planning, and controlling business activities. The Here I have mentioned some of the fundamental accounting principles. We have double entry accounting that we have also discussed in our classroom, which states that every business transaction is recorded as debit and a corresponding credit, ensuring that the books are always in balance. And we also have accrual basis, which means that the revenues and the expenses are recorded when they are earned and incurred, not when the cash is received or paid. We have consistency, which says that accounting methods and practices must be applied consistently across reporting period. And full disclosure mentions that the financial statements must provide all the material information needed for users to make informed decision about the company. So these are some of the principles, and we have also discussed it in our classroom. The key elements of accounting. We must not forget these three key elements of accounting because we will take it throughout our discussion in the income statement, in balance sheet, trial balance, everything everywhere. So we have assets, liabilities, and equity. Assets are the economic resources which are owned by the business, for example, cash, inventory, equipment. Similarly, liabilities includes loans and account payables, which are the obligation owed to others. And equity is the owner's claims on the assets after all the liabilities have been deducted. So these are the three major elements of accounting. We have accounting equation whose formula is assets is equal to liabilities plus equity. And this fundamental equation must always be balanced, reflecting that the financial position of the business is healthy. The balanced equation shows that the business has a very healthy financial position. And I have given one example, which is just an imaginary example, where a business owns $50,000 in assets, owes $20,000 in liabilities, and resulting in $30,000 in equity. So the equation goes like this, where the assets is equal to liabilities plus equity. Now let's move towards the double entry accounting. So double entry accounting is a system where each transaction affects at least two accounts, ensuring the accounting equation is always balanced. So we have to know what a debit and credit is for this, because we will be recording on the debit side and credit side. So debit records the increase in assets or expenses, decrease in liabilities or equity. Similarly, credit records the decrease in assets or expenses and increase in liabilities and or equity. So we also have something called T accounts, which is a tool used to visualize the effects of transaction on accounts with the debit on the left side and credit on the right side. I have given one example of recording transaction using T account in double entry system. So if a business purchases inventory worth $3,000 on credit, that is purchasing inventory $3,000 on credit, then $3,000 is debited to increase the inventory asset. As we can see here on the debit side, in the inventory asset, we have kept the $3,000. Similarly, the same $3,000 is credited to accounts payable, reflecting the liability incurred by purchasing the inventory on credit. As we can see here, we have credited the $3,000 on accounts payable side. So here, the asset is increased by $3,000 and liabilities is increased by $3,000. So, the equation that we have also used in the previous slide in the accounting equation part, it becomes 53,000. The $50,000 becomes $53,000 asset, $23,000 liabilities increased by $3,000, and equity here is no any immediate effect on equity in this transaction. So, I'd like to show you again. So, this equation under the example section, 50,000 is equal to 20 plus this becomes this, and the equation is still balanced here. Now we'll be discussing about the trial balance and its purpose. What is trial balance? So, trial balance is a report that lists all the balances in the company's general ledger accounts at a specific point of time. It includes all accounts from the ledger, both the debit and credits. Some of the purpose of trial balance are it ensures the accuracy, financial statement preparation, and also help in the detection of errors. In ensuring the accuracy, it helps us to verify that the total of all the debit balances equals to the total of all the credit balances and ensures that the accounting entries are mathematically correct. Similarly, for the preparation of financial statement, it serves as the basis for preparing companies' statements like income statement, balance sheet, and statement of cash flow. We will talk it further in other slides. Similarly, in error detection part, it helps us in identifying discrepancies such as incorrect or unbalanced entries that need to be corrected before preparing financial statement. I have covered this part in example as well. So let's move forward. The financial statement. What are the financial statement? And as we have studied that trial balance helps in preparation of this financial statement, let's know what are those financial statements. So we have balance sheet, which provide a snapshot of company's asset, liabilities, and equity at a specific point of time. And income statement helps in measuring the financial performance by tracking the revenues, expenses, and net income over a period of time. And we have cash flow statement, which outlines the inflows as well as the outflows of cash, which will help us in understanding the company's liquidity and ability to meet financial obligations. So these are the financial statement, and we can prepare it by using the trial balance. We will discuss about the balance sheet preparation in the next slides. So coming slides. So here is example how we can create a trial balance. I have used a typical accounts like cash, inventory, accounts payable, revenue, and expenses here. Let's assume that these transactions have been recorded. So this is a trial balance sheet where I have recorded the cash, inventory, and expenses on the debit side and account payable and revenue on the credit side. And in total, we can see that the debit side and credit side is not balanced. So in this example, we do not see the balance in the equation. So this can indicate that there has been an error in recording or an omission. So the trial balance, so this trial balance, we can say that by after observing this, we can say that it helps in identifying these issues before proceeding towards the preparation of other financial statements. So this helps us to know that further investigation is required before moving forward. So I have shown a trial balance which is not balanced so that it will be easier for understanding. Now let's move forward towards the relationship between balance sheet and trial balance and how we can derive the balance sheet from trial balance. Transition from trial balance to balance sheet. For this, we have to identify and separate the account from trial balance into three major categories, that is assets, liabilities, and equity. I have divided this into different steps. In step 1, we have to gather the account balances from trial balance like cash, inventory, accounts payable, retained earning. And in second step, we have to categorize it under assets, liabilities, and equity section. And in step 3, we have to structure the balance sheet. Now we have to keep the assets, liabilities, and equity separately, and we have to take the total of all. And in step 4, we have to ensure the balance sheet balances by verifying. We have to ensure that the total assets equal to total liabilities plus equity. As we can see here, total asset is 8,000, liabilities is 2,000 and 6,000, and later we can see total liabilities plus equity gives us 8,000. So here the total assets is equal to total liabilities plus equity, and it confirms that the balance sheet is correctly derived. Now, the key takeaways from these videos are accounting concept. We discussed an accounting concept like double entry accounting, T accounts, ensuring the transactions are balanced with debits and credits, and about the trial balance, which confirms total debits equal to total credit, which helps us in preparation of financial statement and also in the error detection. Similarly, we discussed how a balance sheet is derived from trial balance by firstly by categorization into assets, liabilities, and equity, then structuring it, and at last we have to verify it. So these are some of the basic concepts, and I hope that the non-accounting professionals can gain some insights from this. I have mentioned some of the references. Thank you so much for watching.